Hey everyone, this is Kirk here again at OptionAlpha.com, and in this video we're going to be talking about the 14 stages of investor emotions. This is actually a really great video, one of my favorite charts that I have with me all the time in my folder, and really like to use it to look at trends and kind of see where other people are. I think once you understand where other investors are in their emotional cycle, it's going to be a little bit better for your own trading as well. So the first stage of the investor cycle, which is all here, we're going to go over every one of these points, is optimism. This is obviously where everyone gets into the trade. Everyone gets in and they're really excited about it. and just as a background, we're going to talk about a long stock, obviously, so it'll be flipped around for a short stock. But for a long stock, everyone's really optimistic and they are excited about the trade. They think it's going to go good. They think they made a good trade. So the first stage is optimism. You're really feeling good about the trade. Feeling excited. Portfolio to this real huge excitement that you think that things are just going to continue forever. Now stage 3, this is really the most risky stage, I guess, in my book. This is the wow, I feel great about this investment, the thrill stage. Now you're actually getting a physical high off of trading. Now, I literally say that because trading can be an addiction. People get addicted to gambling and cigarettes and everything else. You can easily get addicted to trading, and the emotional part of it can come over and take you over completely. You start acting irrational. This is where the trade continues to go well and you get this thrill. You get this thrill that you can't ever get back again. And really, this is what most people chase all the time. After this stage, it goes to stage 4, which is euphoria. This is, I guess, the point of maximum financial risk. This is the point at which the stock maybe continued to move higher, the option price continued to move higher. You never thought it was going to get to the thrill point, and you sure didn't think it was going to get to euphoria, but it did. So this is the point at which you've made as much money as you could possibly make, but you still hang on because you don't think that anything is going to be turning this trend around. Now we start heading back down the cycle, back down this emotional cycle. Stage 5 is anxiety. Again, probably one of the second most important stages in this, and this is where you actually should get out of the trade absolutely. If you didn't get out at the euphoria stage, as you start to see the stock pull back and you get a little anxious, you should start to think about getting out of the trade or at least adjusting your stop price levels. But at this point, you're starting to get a little anxious because the stock maybe now isn't moving as high as fast, or maybe has pulled back a little bit from the highs. So you're not quite sure if you should get out or not. Moving on to stage 6, this is the denial phase. Now the stock is really starting to pull back. And again, you're starting to say things like, there's just a temporary setback, I'm a long-term investor. You start to feed yourself this information that you actually think is true, and you start to say to yourself, I knew this would happen, when in fact you really didn't. And so this is really the denial phase where you don't really know that you have a loss that's going to compound on top of itself. Stage 7 is where we get into the fear stage. Now we've basically wiped out most of the profits that you possibly had in this. Again, we started here at near optimism, so we've basically wiped out most of it. Now you're not even in denial anymore. You realize this is actually happening, and you start to get into a fear or panic mode, or panic comes a little bit later, but you start to get into a little bit of fearful mode here, where you start to panic about what you might do. You don't really know what to do. And in most cases, once this fear sets in, people absolutely freeze. They don't do anything. This is actually the stage at which most people, again, should have already gotten out of the trade. They have another opportunity to take small profits off the table. But because we're so conscious of our own, direction, and we want to be right in picking the direction, this is the point at which most people freeze, this fear stage. Stage 8 becomes depression. Or desperation. Now we get into a desperation stage where we've actually lost all the money that we could have possibly made. We're back at zero, and now it's just a desperate move. We try last-ditch efforts. We maybe add to the position if possible, try to keep it above that support level. In stage 9, we're actually losing money at this point. So whereas we were euphoric and there's a lot of thrill and excitement before when we were making money, we're not actually losing money. This is where real panic sets in. This is where you start to question your entire strategy when in fact you should have gotten out much, much earlier. Once panic sets in, there's really not much else you can do, and that's the harsh reality. If you can get out of the trade in the anxiety or denial phase, you won't ever get to this panic phase. But if panic sets in, then you're most likely going to go through the next two more hard realities and stages here. Stage 10 is capitulation. This is where you absolutely give up, right? You've already made a pretty good loss here on the panic stage. Now the stock continues to move lower. This is what we saw with the markets in 2008 when they started to really sell off. People got panicky and then they just absolutely gave up. They just started dumping stocks left and right. This is where you get those hard, fast sell-offs in the market, really where the market continues to move lower. Stage 11 is where the market really starts to show some signs of bottoming. This is where people, again, absolutely give up. This is where they panic sell even harder than they did before. Panic stage, they're just panicking about their portfolio. They're not getting rid of things. But in this stage, stage 11, people are selling left and right. They don't care what price. They sell at any price. They just want out of the markets, for God's sakes. They don't want to be on this roller coaster anymore. And this is actually the point at which you can actually gobble up a lot of securities. We all know that looking back now, we would have loved to be sitting in a bunch of cash during the 2009 market bottom and gobbled up all kinds of stocks at ridiculous prices. Stage 10 or stage 12 is depression. Again, this comes right after stage 11, where you've already sold all of your securities. You're basically out of the market. You have no money in the market, and you think that this is absolutely going to be the worst thing in your life. You start drinking, if you start drinking or whatever, but you go into depression mode short term where there's just really no sign of hope. Until stage 13. And stage 13 is where you actually do see some signs of hope. The market starts to rally, starts to come off of the lows. It's no longer continuing to fall. It's actually showing small and slight gains. Then you see some relief. Again, those gains start picking up, and then we get right back to optimism. So as always, I hope you guys enjoyed this video and have a better understanding of the 14 stages of investor emotions. As always, please share the video right below with any of the links to your favorite social network.